Thank you very much. I bring my panelists on board as well. We'll start.
That's super interesting.
Guys, thank you very much for being here, and sorry for that time here. There should have been a gap like that. Guys, very, very excited to be with you all today. We're going to talk really about a very exciting topic of the regulatory changes going on right now on the landscape. I cannot promise you're going to cover everything, but I promise you it's going to be interesting, insightful, and also very, very exciting. And we're going to do this because we have today a dream team panel with us that was introduced. I'll give you quickly Stefan Kimmel is the CEO of M2. But one thing you may not know about Stefan, by the way, he's a martial arts aficionado. So here you go, CEOs of crypto exchanges, if you're not in good terms with them, can get pretty rough on that side. Great to have you. Rifad, as well as general manager of MENA OKX. He's a massive movie buff, by the way, with his favorite movie being Departed. There you go, great movie, by the way, on that side. Dmitry Fedotov from ADGM. People think regulators are boring. Dmitry is the only regulator that I know who's an airline, is a plane and helicopter pilot. He's also a race car driver. So here we go. You don't get this with regulators quite a lot from that perspective. Here we go, even to get an applause from that. And of course, Thomas Nägele, one of the long-time members of the crypto community as well, who actually is a coffee aficionado and even roasts his own beans on that perspective. And last but not least, of Jeff Horowitz, who, by the way, talking about adventure in crypto, recently went on a great white shark dive. So here we go. Talk about risk tolerance in crypto, we have it there. So Jeff, I'm going to start with you. I mean, talking about the white shark experience, there's a lot of things going on right now in where you are in the UAE. There's great things being done by VARA in Dubai, great things being done by ADGM in Abu Dhabi. How do you see right now the land? There's a lot of people in the room that are visiting. How do you see the Dubai regs, what you guys are involved in from a VARA perspective, and how do they compare with other jurisdictions you're dealing with, especially the US?
Sure. First, thanks for having us here. We met with VARA over a year ago. We have our in-principle license approval. And what struck me when I first met with them was we're going to take a different approach than the US, who for 4 or 5 years have been debating what's a commodity and what's a security, to the point where this is going to be decided at the Supreme Court level with folks suing the SEC and the Fed, right? That's not the right approach. VARA, told us there are risks in crypto, where we're going to build them into our rule books, and we're going to have a bespoke rule book. So we're going to take a look at broker-dealer services, transfer and settlement, custody license, and come up with what are the risks and how do we address them as a bespoke regulator for virtual assets. In the US, we're trying to pigeonhole this into a capital markets and a banking regime. It just doesn't fit. Our ecosystem changes on a weekly, monthly basis. A couple years ago, we had mining, and then we had staking, and then we have DeFi. You need to have a regulator that's going to be forward-thinking to see how do you adapt as the rules change. We're registered in Germany, in principle in Singapore, and 2 trust licenses in the US. The US is a hard place to operate right now. Guidance comes through enforcement, through the courts, and that's not a good process for us to move forward in this innovative ecosystem. So we enjoy regulators. MiCA took a different approach. VAR has taken a different approach. And to me, I think that's the winning approach.
We'll talk about MiCA in a second. I have to say, I always say to my audiences, if today I believe you set up a crypto business in the US, frankly, you're a bit of an idiot. Unless there's a really compelling reason, there's no point. Rifad, I want to move it to you. Obviously, you guys are also getting a VARA license. How has been your experience with obviously being regulated around the world when you look at the VARA regs compared to other places? And what's your advice for anybody in the room who's looking at that?
I mean, I'll echo Jeff's points a bit, but for us specifically, it was down to 2 things: regulatory certainty and building an ecosystem. So on the first one, think at it from our vantage point. You're coming in as a global firm. You want to set up an operation, you want to start hiring people, there's costs associated, you rent office space. You want to have that certainty that at the end of the line, you're going to get that framework or license or regime that allows you to operate. And frankly, we found this with VARA, and I believe also in ADGM, it exists. So this is a UAE theme in general. Now, on the second component is exactly Jeff's point. You've got Jeff's firm as a custodian regulating VARA. You've got the exchanges regulating VARA. You've got the brokers. You've got the infra players. It's becoming a whole ecosystem that is operating within one regulated space. And that is, for us, is a very attractive proposition for anyone coming to the UAE specifically. Whether it's VARA, whether it's ADGM, the ecosystem here is becoming much more, or flourishing much more than it was a year or a year and a half ago.
Of course. No, it's been actually, we've definitely been seeing the boom now in the UAE on crypto. And I'll move it to you actually, Stefan, on that side. Obviously, you guys are regulated in the Bahamas, you're all, in the process here in Abu Dhabi. How do you manage it, especially considering some of the products you have? For example, you guys have a great yield product that you guys offer on your platform. How do you manage the regulatory landscape with the products that you're offering?
Yeah, look, I think that's one of the big challenges for any entity, for any service provider who works across different geographies and different regulations. At the end of the day, as the rules get more clearly defined in each jurisdiction, of course, we can't just, the day's over, we can have this one great platform, one great offering, and just bless the world with it. You have to adapt and adjust your products and services to each jurisdiction. Some products are not even allowed or not regulated. Basically, there's no rules that exist for them in certain jurisdictions. So we do this with a cross-jurisdictional approach. So some products are offered through some jurisdictions, others in others. We see where we combine them to a more comprehensive offering for customers. But at the end of the day, we might find in MiCA we're not allowed to do certain things that we're allowed to do here or in the Bahamas or in other jurisdictions. So our approach is always every country we go to, we want to be regulated. The foundation of everything we do is transparency, safety, and regulation. And that just means we can't do everything you'd like to do in every single one of those countries.
Yeah, I'm sure that's a lot of work behind the scenes as well on that front. Actually, I want to talk about MiCA in a second. Before I want to pass it to Dmitry, one of the, I find most interesting and frankly a piece of regulation that I love the most is what you guys have done at ADGM for DLT foundations, which I think is a very, very unique feature. Can you maybe share with our audience what is a DLT foundation and how it's unique and how you guys are pioneering on that space as a regulator?
Yeah, and I appreciate the compliment. So DLT Foundations regulations is really a pioneering piece of legislation that is aimed to provide regulatory certainty for entities that are not easy to regulate, such as DAOs, decentralized autonomous organizations, or blockchain foundations, or pretty much any Web3 entity that is decentralized. And I think we've done a very good job at doing that by establishing regulatory certainty where it needs to be without regulatory overreach. So as such, we completely recognize ownerless, decentralized entities. I think when you mention this set of words to most regulators, there will be a long pause. Ownerless, decentralized entities that are technology governed, as in we recognize the governance done by smart contracts and governance done by token holders, or decision making done by token holders. I think this brings our jurisdiction quite a step forward in this technological aspect.
Yeah, it's very interesting. I think the way you guys have been pioneering that, I think there was a need in the ecosystem, and I think kudos to the ADGM for putting that together. Talking about another piece of interesting regulation coming up is MiCA. I mean, you're based in Liechtenstein, by the way. Not that I'm sugarcoating this, but I mean, another great jurisdiction in Europe that has done a fabulous job over the years. Can you maybe share with our audience from a practical perspective, what's going to be the impact when we come back, let's say 12, 18 months from now, what's going to be the impact on the ecosystem with MiCA on the crypto side?
Sure. I mean, as we briefly heard as well already, I think what we need is we need like access to a bigger ecosystem or a bigger market, right? So it's not only about building the right framework, it's also like building the right ecosystem. And Europe started with Switzerland and Liechtenstein like way back, right? And we had regulators like FINMA, the Swiss one, which was very open-minded. And now what you have is you have this marketing crypto assets regulation from the European Union, and that's the killer feature, and I will start with that, gives you access, you have one license in one European member state, and then you can access 23 million businesses or 450 million users, right? Yeah. And that's the killer feature of this marketing crypto assets regulation. One license, access to the digital single market. But what you need is actually every member state is now figuring out how they should be like their regulator, educate their regulator. They have to get ready to issue these licenses, right? So, and there are two things which are, I mean, I think which you just have to be aware of. So there is no, as of now, no reverse solicitation possibility under the MiCA regime. And that's actually a very big challenge, right? So speaking of every company who is licensed in any other jurisdiction, you have to think of, back in the old days, it was a very easy way. You actually could if a client from Europe wants to get onboarded on your exchange here, that was possible. With MiCA, that's for the first time ever where the European, and I'm not a fan of that actually. That's what I said, that's not the right approach. That should not be possible. So you need to have substance in Europe, you need to get a license in Europe to actually onboard European clients. That's one thing. And the other thing is, and that's my biggest wish for our industry, is that we learn from each other. We learn from VARA, we learn from what happened in Abu Dhabi with ADGM. We learn from each other and come up with an equivalence regime, framework that we can actually easily access from the UAE, in Europe, in the US. That's going to be a little bit of a longer journey, I think. But that's my vision, right? And I think we should share our experiences, what worked and what did not work. And that's how we actually move forward.
But I think there's also a risk that actually you're going to have, in 2-3 years, the US bubble on its own. You're going to have then the EU crypto bubble, and then you're going to have the rest of the world. In the same way, in traditional finance, we have Asia ex-Japan and so on and so forth, right? So I think that's one of the risks. But hopefully we'll have equivalencies, but as you know, it's very difficult on that side. Yeah, so I think the landscape is pretty interesting how things are evolving. I just want to move on also on the instrument level. Crypto derivatives, then we'll talk about DeFi as well and DAOs. But let's talk about crypto derivatives. I'm going to move it to you, Rifad. Regulating derivatives in traditional finance is already difficult. In crypto, with perpetual swaps, like futures that never settle. On OKX, you have even projects like Nitro products as well, which are quite interesting. How do you see, in your perspective as a business operator, a good way to regulating derivatives? Like if you had a magic wand and for regulators, how would you think would be the best way of doing it?
To be frank with you, I'd follow the same approach we've done with VARA on the regular sort of spot-related assets, which is a collaborative approach. Rightfully you mentioned this is a very complex product in its normal state. Imagine with crypto. So building the capabilities of understanding on the regulatory side as well are equally important, so that the regulator understands what type of product are you offering, how does it affect the user, what type of user do we offer it to, and so forth. And I think we found here a clear collaborative effort with VARA on explaining derivatives, designing a regime around derivatives. And I think if we want to follow suit in other markets, that's the way to go. Stefan mentioned a good point. Each market will have its own characteristics. Some markets will want you to offer derivatives, some markets won't. And that's a very welcome discussion that we need to have. But it has to start as a discussion, and it has to start as a collaborative discussion. Because if you come in and say no derivatives and that's that, then nobody won, right? Let's start from, take it a step back and see how can we make derivatives work in a current regulatory regime or regulatory market and take it from there. And I think that's the first step.
I'm always wondering, why isn't there regulators doing more discussions, actually? I don't know from a US perspective or from your perspective, Stefan, I mean, why do you guys think we don't have this more discussion process with regulators? I know there are many regulators in the room as well here today. I mean, what's your view? I mean,
so in the US, we have SIFMA, right, which is kind of a lobbyist organization made up of all of the industry participants in the broker-dealer world. And before any regulation is issued, it goes through them, and they have the conversation with the regulators. We're able to put out comment letters. VARA did a bunch of workshops before they put out their rule book. Let's hear what the challenges are with the industry. How do we clearly understand the products? But, the SEC says come in and meet with us, but it's just to give you a subpoena or an enforcement action.
Yeah. It's very interesting how that dynamic happens on that perspective, on it. Let's talk about, for example, DeFi. Maybe I'll move to you, Thomas, right? The inherently regulating DeFi, anything decentralized is very difficult, right? But when we look at the, anything from FATF guidance coming up, the G20 guidance coming up, there's a lot of indication that DeFi should be regulated. I mean, even the US, SEC as well, some of the comments they made on exchanges. What do you guys think is an avenue of regulating DeFi, if it's even possible, or even if we should even do it in the first place? Maybe I'll start with you, Thomas.
I think we have to differentiate between regulating like the service providers because there are risks involved. So for example, if you run a DEX and then you allow for front orders, fake, front running, all of that stuff, if you address it with technology, my point is actually, and it works, right? It's really effective, then you don't need to regulate it. It's a completely different question if you look at the compliance angle of things, right? Counter like financing of terrorism, KYC, that's a different thing, right? There, yes, we need regulation. We need, or at least actually we have to address these kind of risks, right? I think with technology, for me, short term, what we see out there, 98% is not really truly decentralized, to be very honest, right? If you look at, there's always a master key, they can always so yeah, if something is really truly fully decentralized, I don't see the point of regulating it if the technology is really doing what it should be, right? But as soon as you have one intermediary, or like if you operate an intermediary providing services or like getting value out of it, then it's a different thing. You have the same old world again. There's one person which does something, or like an intermediary or does something, and then this person or this intermediary has to be regulated. Different story, right? I think it's the view. And having said that, I think that is the good approach about VARA, that you can actually act quite fast, right? Yeah. We have now in Europe, we have this service providers based on MiCAR, but this is just the service providers for like the supervisory part. It's not the compliance part. That's different, right? And that's separated. But if you talk to a well-educated regulator and ask them the question, would you regulate DeFi? I think the only good answer is that really depends if technology is not working as it should work, right? And if you don't really use fully decentralized solutions.
I mean, the technology is going to work the way it is, right? I mean, it's code. It's difficult to screw it up, but it's interesting, I mean, how this is going to evolve on that perspective. I'll pass it to you, Stefan. I mean, on a practical perspective, let's say there's a travel rule coming up, right? Where every licensed entity needs to send a beneficiary and recipient information, very similar to how we use with SWIFT right now between the banks, right? How do you see this working out? I mean, actually, practically, what are some of the challenges you see the industry will face? And is there a way we can deal with some of the challenges of DeFi?
Yeah, I mean, they related, and there's a hot debate also to what extent travel rule has to be applied to DeFi, which is a very, very hard thing to do. The challenge we see is travel rule. I mean, the discussion on travel rule is been out there for a while, but I think most regulators are still trying to get their head around of how to enforce it and what the exact rules are. One of the questions is, should unhosted wallets be part of it? And then if they are, how do you actually practically do that? Because by default, they are anonymous, or you don't have a name attached to it or an email address attached to it in most cases. So right now, that's practically very hard to do. Same with centralized exchanges. So if we receive a transaction coming from a centralized exchange, it all comes from the same hot wallet. Yeah. So if all of you send me a transaction from your centralized exchange, if it's from OKX, for example, it all have the same address. Then there's service providers like NOTABene or US Trust and others who try to cater for that, but it's optional for service providers to entertain, to provide that information. So practically on the receiving end, I don't have any way to guarantee I get the recipient address for those transactions. To really ensure I know that any sending or receiving wallet is really owned by the person on the other side, there's a limit to how much I can practically enforce. And that discussion, we're having that in 4 different jurisdictions right now, and every regulator has a different view, and none of them have really clear yes, no, black, white. So it's a bit of a hit and miss. I think that's one of the challenges working across different jurisdictions, and specifically travel rule itself is a very complex topic for us to do.
It's very complicated. I mean, how do you guys want to deal with what's your view on travel rule?
Yeah, so, and I've been doing this for almost 6 years, and I started the trust group for Coinbase to try and tackle it, and went to the FATF meetings. And what FinCEN and FATF wanted to hear was, no, we're not going to argue we're different, try and figure out a solution. So we came up with something that works in the US, because that was the only place where we had similar regimes. We're all registered as MSBs. But we couldn't figure out interoperability. I didn't have a wand to say everybody in Asia do it this way. So that's one of the challenges. But I think what they missed was, until we have global AML standards that every VASP or CASP has to do certain things, I don't know if we need the travel rule, right? Crypto is a wallet-to-wallet transfer. It's not correspondent banking where it goes through 3 banks and you need that information to travel. So if every regulated entity had the requirement to keep all their KYC information, there's only 2 places to subpoena. So I think we're creating more of a problem than a problem that we're solving. And unless we figure out interoperability, there's going to be gaps.
Because you raise a good point, right? If the AML standards are reasonably solid across the world, this is a moot problem. Actually, we're just creating
a honeypot of data that's going to be a problem.
But then is there even, there's no way even to backtrack at this stage. I mean, it's there, like, so this is going to come out, right? It's just going to be an additional cost on crypto exchanges, the industry participants, frankly, without solving a real problem, right?
Correct. And to Steve's point, right, we're going to go underground because you're not going to go through regulated folks, right? You're going to do unhosted wallet to unhosted wallet, and then what's law enforcement going to do? So we may be creating more of a law enforcement problem than we're solving.
Yeah, exactly. It just pushes people to, and we've seen this in many other industries, from marijuana to others, where I know when you try to make certain rules, people will just go a bit, more underground on that side. I'll bring it to you actually on this front, Dmitry. You know, one topic where maybe I was naive, I thought there would be more consensus was on tokenization, where I think we all agree real world assets, tokenization, it's a security, but even there's a lot of challenges still in how regulators would deal with tokenization, because if we're using crypto technology, DLT technology, but an asset that is often a security. So what's your view on that, of how can we be a good way to deal with that?
Yeah, it's actually a very good segue from DeFi, and I really very much enjoyed your interview with the head of DYDX a month ago. So
Charles Dossi, yep.
Exactly, Charles. Where he said that it would be reasonable, in terms of DeFi, it would be reasonable to regulate the providers, just like in the internet. In the beginning of 2000s, I think some of the people on the stage remember the beginning of 2000s when governments were trying to regulate the internet broadly, which didn't work out, obviously. And then the approach went on to regulate the providers. So going to tokenization, I think we have pretty much the same set of challenges. So tokenization as a technology is very well polished. There are tons of companies that are engaged in tokenization, and frankly, without going into the moral aspect, you can tokenize pretty much anything. If there is a kid that is throwing a rock against a tree in Tijuana, you can tokenize it, right? The result of this action. The challenge is really the middleman, since the tokenization usually happens through some sort of intermediate company that is doing or issuing the token, right? So what if this company fails? Do you have a trustless aspect? And I have seen a lot of ways to go around this. For example, how do you tokenize bricks of gold, right? So you can engage big fours, right? This is one end of the range to the other end of the range with ZK rollups, zero knowledge proof, right? So all kinds of really creative methods, but no kind of consensus of what the right approach is. And they all have their own flaws, obviously. And the second aspect is legacy. So as a regulator, I have an understanding why we sometimes are treating careful when it comes to things like DeFi or tokenization. Yep. And the reason is, for example, it would be great to have, let's say, all real estate transactions in UAE going through the blockchain, right? It would be great to have, instead of lawyers and banks that are holding your escrow, to have a smart contract where you send the money, and once the registry updates, the money is sent to the seller, and the buyer receives his record of title deed, ideally in form of an NFT, right, or some other digital form. The reality is that we're dealing with legacy systems, and this is one of the biggest bottlenecks that we have. Legacy systems that don't work on weekends or during nighttime or during floods. That are, even if they are technology enabled, largely centralized. And this is really the reason why the regulators are challenged, not because we are not progressive thinking.
Yeah, it's very interesting. Can you go share Mika? What's the angle with Mika?
No, that's actually, let me add to that. And I said we should learn from each other. I want to point your attention to what Liechtenstein did in that respect. And I think that's not the supervisory part, that's the tokenization part of the framework. We call it Blockchain Act, actually. We have, and I'm fully biased because I helped and I wrote my PhD about it afterwards. So I'm all into tokenization. Yeah. And I think you said it's a security. That's one approach, right? The other approach is actually that you create kind of a container, and then it's not in the securities regulatory world, right? So in the approach we have in Liechtenstein, and that's actually used for other countries now as well as a blueprint, is that you could actually tokenize almost any right, could be ownership, so physical ownership, and what you end up having is a blockchain transaction, which is an enforceable claim to you actually by civil law. We are a civil law country. If you transfer the token, also the represented right is transferred. And I think that is something we are now talking all about real-world asset tokenization globally. Now it's a new trend. We have that enforced since 2020. Our third largest bank is doing tokenization of piece of art, of watches, of collectibles, and you have it in your portfolio overview of your bank, right? That's something, and I'm just mentioning that. I mean, Liechtenstein is a very small country in Europe, nobody cares about, but it's a good use case. It's a blueprint others could use, right? And if you want to talk, Clara Guerra from the Liechtenstein government is standing in the back, open to answer all of your questions, right? I think that is really what we should do. We should learn from each other, and we do have experience in that area, right? And the other approach is basically securitize everything, right? It's also an approach which has challenges and opportunities.
But Thomas, how would it work? Let's say under MiCA regulations, I mean, talk about learning from each other. How would a tokenization be viewed, or it's outside?
It's not covered by
Exactly.
MiCA, because that's basically civil law, or like it's private law aspect of it, right? So MiCA is not covering the tokenization part. It's covering the supervisories. Like if you provide custody for a token representing ownership, then yes, you're under MiCA. Yeah. But that is the challenge. Every European country now has to figure out their tokenization approach, right? How you can actually end up in this legally enforceable transactions. Yeah. So it's not covered by MiCA. That's the simple answer.
Yeah, and I think that's what's going to be interesting. Yeah, you can have unified for MiCA across the EU, but then you have this can come up as a problem, right? Yeah. So, anyway. One other problem I think that is very practical, I think everybody in the industry has right now, is the banking problem, right? Maybe I'll start with you, Rifad, on this, because when I look at the global crypto ecosystem the last 12 months, we had some of the big US banks that went under, Signature, Silvergate, and others, and really that caused an issue. And the reality is, maybe ironically, the vast majority of trading pairs right now in crypto are on USDT, or they're still dollar denominated, right? Yep. Which is, we can debate that all day. But again, the fiat on-ramp and fiat off-ramp is a problem, I would argue, many parts of the world. How are you guys dealing with that? What's your view on that, the size of that problem, and what do you think is going to be the potential solution we'll have on this? Now I'll start with you, Rifad, and we can move it out.
Yeah, so it's still a core obstacle for anyone operating an exchange. And when it comes to operating local currency order books, this becomes your biggest issue, because you want the fastest settlement possible between any clients. And when you start attracting institutional clients, specifically here in the UAE, they want to be able to put in their money in and out and fairly quickly. Now, positively though, the UAE has gone a long way, and I think there is now a framework where you can get a client money or custody account for your business. Yeah. It's not as mainstream as maybe some other markets when it comes, it's not every bank, but there are banks that are a bit more proactive and actually allowing
AED
others.
Though, right? AED.
On AED,
yeah.
Correctly. Now you still potentially can explore other banks for, I think the discussions are now, other banks are looking at other currencies, but it's still for now AED. But for us, AED, if you're offering AED to BTC, AED to ETH, it's still good enough to operate an order book where I can settle with you fairly quickly. So I think there's a lot of work to do, but it's at least the biggest obstacle is behind us. But now, how do we grow this to become more mainstream for every player, for every exchange?
Because maybe I'll move to Jeff to talk about what you guys have at Bitgo, but I think it's interesting when I look at the total flow of crypto, really the majority of the correspondent banking that I see in the world right now is going to Customers Bank in the US, is going to United Texas Bank. I mean, there's a systemic risk. We used to have 4 or 5 banks. Now it's like literally down to 2 or maybe big ones, like there's others that are doing it, but I just find this is probably one, in my opinion, the biggest problem we have in 2024 in the crypto space. Because I know you guys at Bitgo, Jeff, you guys came up with a solution as well that actually allows people to move the money around, right?
Yep, yeah, so we created the Bitgo network where customers can leave their assets under cold storage custody, but we have the ability 24/7 to move crypto and fiat. And it's somewhat a replacement of Silvergate because there was a concentration risk there. The government did not like crypto. They warned the banks, if you're going to do it, right, you're going to come under scrutiny. So you had Silvergate, SVB, and when there was a run on the bank, right, those 2 failed, and it spilled over to Republic National Bank, right? I think crypto has a concentration risk, and whether it's market structure risk, with only a few being able to be the custodians for the ETF, right? We had SAB 121, which came out, which kept the banks on the sideline. They would have to hold crypto both on their asset and liability side of the ledger. And, you're going to have $100 billion in capital to participate in the crypto ecosystem. And that's not good for us to grow, right? So there is a bill that just got issued, I think, by Mike Flood, one of our congressmen, to repeal that.
Yeah.
It wasn't regulation, it was a bulletin,
Yeah.
and it was never shared with the rest of the regulators. So I think concentration risk is an important thing, and it spills over to banking. And I think that's what the regulators are most worried about. As we become a $1 trillion, $2 and $3 trillion asset class, do we have systemic risk for the market?
I would argue that SEC guidance on that accounting, I just think it's also discrimination, frankly. Like, it was completely stupid on that side. Quick question I want to ask you, like, do you think the US will make a comeback on crypto regulation? Like, I know you're speaking a position as CCO of a US regulated firm, but, or it's too late, that the train has left the station?
Well, I think this year it's too late. I think we either need more vocal legislators, a change of administration, a change of the way of thinking, because otherwise this is still going to be bouncing around the courts.
Because I would argue with this, even if the government changes in the next election cycle, I mean, that's in 8-9 months. I mean, crypto, that's 5 years. I mean, God knows what will come up. ADGM or VARA will come up with in the next 5, 6, 7 months, let alone the next year, So, so guys, we have really a couple of minutes. My bell is back with me, so I'm going to ask you guys quick questions. I need 1 or 2 word answers, and we're going to kick up. We're going to continue like that. Are you guys ready? Stefan, I'm starting with you on this one. What is the one topic that any CEO or CCO should be worried about for the next 12 months or pay attention to in the next 12 months?
It's probably the fiat rails.
Fiat rails, banking. Rifad.
I can't use that, so custody.
Custody. No, you can use the same one. What do you think? Banking.
Regulation.
Regulation.
Reverse solicitation on the MiCA.
Reverse solicitation under MiCA. I have to say, I'm surprised more people are not talking about that. Jeff.
Market structure.
Market structure. Interesting. Interesting. I'm sorry from you, Jeff. What's your favorite thing about Dubai? We're in Dubai this week. What's your favorite thing about Dubai?
I'm not stuck in an airport anymore. Took 2.5 days to get here. But once you're here, it's a great place to be.
Love it. Thomas?
Impressive. They create a vision and then they really execute on it at an extremely fast pace.
Vision execution. Thomas? Dmitry?
Yeah, I think it's the amount of events that I had going on here. I mean, the schedule is, I'm sure everybody is quite full all the rest of the days.
Yep. Right.
Yeah, the ecosystem. It's
Ecosystem, yep.
Full ecosystem.
So I lived here for 15 years. I'd say it's the quality of life, a fantastic community that lives here. It's just a fantastic place to be.
Starting from you, Stefan. If you could go back to school today, you can go back to university, what is the one course you would take you wish you had taken before?
I would pay a lot more attention in history classes. I used to think they were super boring, and now I'm really upset with myself that I didn't pay more attention.
History class, very interesting. Rifad?
The computer science.
Computer science. Dmitry?
Echoing computer science, but more probably into real sciences like physics and chemistry.
Love it.
Psychology.
Psychology, interesting. Jeff?
I was an economics major, so I'm glad to actually see, how money has changed over the years and actually get to apply what should finance look like.
I'm starting from you, Jeff. If you're not in crypto, what other industry would you be in?
I'd be a dolphin trainer at SeaWorld.
Dolphin trainer. I can see you dive with white sharks, you train dolphins. Here you go. It's
a relaxing day.
There you go. Thomas?
Coffee.
Coffee,
Obviously.
really?
Coffee.
Very good high margin business, by the way. I love it.
And I love coffee.
There you go. Dimitri?
I would work on teleportation.
Teleportation.
Whoa.
Okay. I don't know how many regulators are in teleportation. That's why I love ADGM. I love the vision you have. I love it. Rihad?
Food.
Food.
Restaurateur or something like that, but food.
I used to have the ambition to become the lead singer in a boy band. Unfortunately, my voice sucks, so that was never. But it's a dream still alive a little bit.
And there's lots of TV shows that probably take you on that front, I'm going to start with you, Stefan. This is a funny one. Sam Bankman-Fried gives you a call from prison. What do you tell him?
I'll just hang up.
Rifad, SBF gives you a call. What do you tell him?
Hang up.
Dmitry?
I would probably say hello.
That's it. Thomas?
We have a very strict onboarding, so sorry.
Not waiting around for Act 2.
Good one. Okay, guys, and to finish it off, this panel that at World Blockchain Summit this year, I'm starting from you, Jeff. This is the traditional question, whoever goes on a show or comes on stage with me. if you could have lunch or dinner with one person, dead or alive. Lunch or dinner with one person, dead or alive, who do you have lunch or dinner with?
I like to have lunch and dinner with Bruce Springsteen.
Bruce Springsteen.
I've met him. He worked out at my gym, but we never got to have coffee.
Oh, here we go. Bruce Springsteen. Wow, I love that. Thomas.
Steve Jobs.
Steve Jobs. Here we go. Classic. Dmitry, who would you want to have lunch or dinner with?
Satoshi Nakamoto.
Satoshi Nakamoto. I love it. Whoever he, she, or they are, hopefully we'll find out one day, and they get their Nobel Prize of Economics. I love it. Rifad, who is the one person?
Same theme, Bono.
Bono. Yeah. Really? Interesting. And to finish it off, Stefan, this panel, if you could have lunch or dinner with one person, dead or alive, who do you have lunch with?
Boring and mainstream. I'm going to go with Elon Musk.
Elon Musk, here we go. With Tesla doing its earning call today, we'll see how that one goes. Guys, thank you very much. A big hand of applause for our panel, and see you guys soon. I'll bring back the end here.